Prices, if you haven't followed them this morning, they're rebounding a bit. This after, of course, what has been a significant decline so far this month, coming off one of the lowest levels we've seen since August of 2021. Joining us now to discuss where, all sorts of things go from here is RBC Capital Markets, Helima Croft. Helima, great to see you, of course. Always good to have you here. What do you think of this move? Does it make sense?
I mean, I think the oil market is taking a bit of a breather. I mean, it's been hit by two stories. Obviously, the big one is the concern about recession and, what's going to happen in the all-important demand center of China. But also, OPEC announced last week, surprisingly, they would bring on more production in May. So people were saying, wow, we have a recession potentially looming and more OPEC supply. It was a toxic cocktail. But I think for now, people are waiting to see, is there a potential off-ramp to this trade dispute? And OPEC will be meeting on May 5 to assess what's happening in terms of compliance in the organization. Yeah. Now, the president has long called for crude prices to be actually even lower than $50 has been his price target. And we have not really heard much full-throated opposition to that from people who actually work the shale in our Saudi Arabia, so to speak, in the Permian. Which is so interesting because take a step back 5 years ago when we had the Russia-Saudi price war. And these same shale executives, it was basically hotline diplomacy to the White House saying, look, $30, $40 is going to kill American energy dominance. You need to get the Russians and Saudis back together. And President Trump, the ardent OPEC critic, became the basically OPEC president and got the deal across the line. So we saw President Trump really pivot 5 years ago in terms of what the energy policy should be. I think it's remarkable now that shale executives have seemingly been more quiet in terms of expressing concerns about a $50 price target.
Well, that's because he ran on inflation and he wants to lower inflation and make it cheaper for American households to buy gas.
I understand that, but it's a really interesting dynamic because where we were sitting at the election, it wasn't a particularly painful retail gasoline price environment. And the question is, if your goal is to have massive growth of U.S. production, what is the price that creates that enabling environment?
What is it?
Is there an equilibrium price that potentially works for the U.S. consumer and U.S. producer? I think that's an interesting conversation.
Is there one?
Well, it's always, we always have our pain points. But the question is it $70 WTI? Like, that is a very, very good question when you have Chris Wright on.
Yes, next hour.
The conversation is, what are shale executives saying to you about what they think is the kind of optimal price that keeps demand going, that keeps the consumer strong, but also ensures investment in the shale industry?
Yeah, at a time, you talk about what their costs are going to be doing under the tariffs.
Exactly.
And even
if we don't have the full-blown trade war with China, we have the aluminum and steel tariffs. Input costs are going up. So again, another question for Secretary Wright is, how is the industry, even if we don't have the trade war, how are they going to absorb these higher costs?
My guess is, as so many CEOs are talking to me about how important they find tariffs, that you may be hearing it, but not publicly. Fair to say? I mean, do you hear that in conversations you have with the industry?
I mean, we do hear that. We do hear concern about what is OPEC going to do. I mean, I've heard concern from the U.S. industry about what if Saudi Arabia, which has a voluntary cut of 1 million barrels outside the collective cut, just decides to give President Trump what he wants. I mean, President Trump has been asking Saudi Arabia and OPEC, give me more barrels, give me more barrels, give me more barrels. And if they give him what he wants, that's not exactly what I think a lot of shale executives would like at the moment. Now, again, the Saudis are saying, and OPEC is saying, we're going to bring in, 400,000 plus more barrels now in May. We're doing it largely because certain countries within OPEC are cheating. They're not abiding by their quota. It's not about the U.S. It's not about Iran. We're going to review in May. But in the back of people's minds is a concern. Are we back to 2014? Are we back to 2020 when OPEC just turned the taps?
Right. Any thoughts on where we're going from here, then, on oil prices?
I mean, I think it's going to be so dependent. We wrote a note saying three-body problem. It's going to come down to tariffs, what OPEC does, and the wild card, there's a meeting this weekend in Oman, U.S. and Iran. Do we get a deal on Iran and sanctions removed, bearish for oil prices? Do we get a military strike? Do we get some type of confrontation? It's coming to an end game, I think. Do we get more sanctions on Iran? It can go either way. Pay attention on Saturday.
All right, I will. Thank you, Helima.
Thank you.